Welcome back to another video, and you guys have been asking for this one a lot, and it is a portfolio reveal. So I've got a couple things to show you guys today, a couple interesting things, as well as obviously the portfolio that's going to come a little bit later in the video. I'm going to try to keep this one quick, make this a short video. I'll probably upload it in 720 because my internet is poop down here. And yeah, anyways, let's just get right into the video without further ado. So the first thing I wanted to do is just a little throwback to, I'm actually making a video called my top 7 most disliked videos. One of them is a video where I said this. That's what I think that is being priced in. I personally don't think this virus is going away. That's just my thoughts on it, and I'll see you guys in the next video. So, a lot of you guys didn't understand why I said that. You know, why are you being a pessimist? Why do you think the virus isn't going away? Well, it's because in college, I studied biology and I learned that genes, viruses, they mutate. So you look at the flu, you look at other respiratory viruses, they mutate. So we've got a bunch of different mutations of the coronavirus coming out now. So this comes as no surprise to people who understand, you know, it's the same reason why if you have a sibling, you don't look exactly like your sibling. The genes mutate. The genes don't always transcribe in the same exact way that we anticipate. So that's how, you know, that's why you have to finish your antibiotics. There's a lot of implications of that. So the fact that the virus is mutating and that we are still locked down in some places and not locked down in other places, it's not a big surprise to me. But you know, I'm not gonna say I called it, but actually, I'm just going to say I called it. Anyway, moving on to the next thing. Some interesting stuff for you guys before I get into the actual portfolio. So, pricedingold.com. This is something that just measures things priced in gold. Saw this on my friend over there, Heresy Financial. Joe over there, he's got a great channel. You should definitely subscribe. But this is just showing you what things are priced in gold. So, if you take a look at these commodities such as crude oil, you see it from a year ago, crude oil is 127% higher when priced in gold. So essentially we price things in dollars, but what this site does is it just prices things in gold, which over time, gold has less of an inflationary effect, right? Because the rate at which we're mining gold is much slower than the rate at which we're creating dollars. I mean, we created 25% of the dollars in circulation last year. So if we go into this next chart over here, it's the S&P 500 over time as measured in gold. So we do see an upward trend, right? The S&P 500 does just appreciate as far as gold, because as more gold comes out of the ground, the value of each individual gram of gold will go down. But we see that gold tracks, you know, the value of businesses much better than say the dollar does. If you were to look at the S&P price in dollars and you look at it versus 1870 back here, which the S&P didn't exist back there from what I understand, it would be way higher, right? The dollar has lost, I want to say, over 99% of its value over that time period. So anyways, if you look at it priced in gold, you can kind of get a little bit of a different type of indication of whether the market is high, whether the market is low. If we look over here at the dot-com bubble, priced in gold is much higher. We look over here, 1987, always over here, right after that. Is that the flash crash right there? Anyways, it just gives you some different insights to where you can see where those different bubbles are. Anyway, just compare it to gold. This is some interesting stuff. So shadow stats, this is something that I take kind of with a grain of salt. We've got U3 unemployment, which is the official numbers of unemployment. U6, which includes marginally attached workers. So basically people who are underemployed, people who have stopped looking for work, people who have looked for work within the past year. But then you have discouraged workers, or in other words, this shadow stat basically does a little bit better of a job of just saying how many people of working age are actually working. So 25% is a much different number, but you kind of have to take that with a grain of salt, because you have to ask how many of these people are single mothers, how many of these people are disabled, how many of these people, you know, what is their scenario. But the 25% number is a little bit of a, in my opinion, more accurate number of how many people are actually working. Because when we think of unemployed, what pops into our head means that they don't have a job, right? So if you actually think about it in those terms, these numbers can be a little bit more accurate. So into the portfolio we go. All right, this is my 401k from my job. For you guys out there that don't know, I work in a laboratory, and this is just their 401k system. So you guys will see here when I show you guys the allocations, most of my money is actually within a 401k. So people ask me about stock picks all the time, but as of right now, I'm mostly focused on my retirement accounts. Until I fill them up, I'll probably be done by about May or so, and then I'll move on to my individual accounts, but we'll get into more of that later. So about 36 grand over here is in the S&P 500. I do encourage you guys out there to go and see what your retirement account is in. See what's in your retirement account and make sure that you're not investing in, say, a ton of bonds or some mutual fund that has high fees or things of that nature. So let's go into the individual account. I basically bought a stock slice of NVIDIA. So that I bought $100 of it, and it's gone up to $111.11, which is a little bit, I don't know, maybe that's a sign. It's a sign from the universe. I don't know what it's saying. Anyways, moving on to TSP. This is the government's essentially 401k. We got all of this is also in the S&P 500. So once again, if you guys have some type of retirement account, if you're in a life cycle fund, personally, I would not be in a life cycle fund. Obviously, I'm not in a life cycle fund, but we can make that. I have a different video about that. Go look at life cycle funds. Basically, what bonds are and what the bond market is doing right now as far as interest rates and inflation. So got about 11 grand in there. We'll recap all of this stuff later. Charles Schwab. I really like this brokerage because of all of the features, right? You can check out what the market's doing, and you can get a little bit of stock research through this platform. So I've got about 29 grand in here, about 8,500 over here in my individual accounts, which means that that's a taxable account, about 20 grand over here in my Roth IRA. So I'll go through some of these positions down here. I'm just going to scroll past them just because I have so many positions. But basically, I'm not trying to get rich with this portfolio quick. What I'm doing is I'm going in here, I'm picking great companies that I think over the long term, over the term of my life, they're going to do great. They're going to be rock solid. So you guys wanted to see these, so I'm just kind of scrolling through them, but I'm not, trying to knock it out of the park with these companies. A lot of these companies, they're just, run-of-the-mill companies that everybody knows the name of. They're going to be selling products today. They're going to be selling products 5 years from now, 10 years from now, probably 20 years from now. So some that I am a little more excited about, we'll get into those in the M1 portfolio. Recently, I've been buying into Progressive, so I wanted to show you guys this. It's got a great dividend payout ratio and payout as well. So they pay out, looks like $5 there in dividends per year. The annual dividend is a little bit off there because they usually have a special dividend. So they've got a pretty high dividend yield, as you see. I believe it's about 5% if you actually do the math. The math that I've done, it's about 5% based on paying $5 and being about $100 per share. So anyways, recently I've been buying into that. It's growing really well, and it's a really stable business model. Portfolio over here in Robinhood, I've only got 4 positions over here. Just added a little bit more Progressive, 1 share. Got some TTCF in here, some Facebook, and got some Dropbox. So only about $1,000 in there. Once again, not focusing on the taxable accounts, just because right now I'm focusing on filling up the retirement accounts. I've got about 8 grand to put in there, and I should be done by about May. Once I'm done with that, I will start focusing on, potentially these growth stocks and all these other higher conviction plays. All right, I'm still here. Growth pie. So let's go into the growth pie. I've got 18 positions in here. So my highest allocations are Tesla and Beyond Meat, and then these are just some other great tech companies that I have really high conviction in. So NVIDIA, I think they're going to do very well as far as the cycle into self-driving and AI and all that good stuff. Facebook is just a beast. Adobe, stable business. Google, very stable business. Watching them on YouTube right now. Uber, I have high conviction in them. AMD, I think they're going to be in a lot of different devices. Dropbox, Apple, Amazon, Chipotle, these are just solid businesses that I think they're going to be around. Chegg is one of my bigger bets. I think that that's one that people are starting to catch wind of, but I think that one's still a little bit underground as well. So got some high conviction in those. Let's go over to the Roth IRA. This one is just absolutely more of a spray and pray method, right? This is my retirement account. I just put a bunch of companies in here that I like for various different reasons. So I'm just going to scroll through these. Maybe I'll highlight some of them just to fill the space. Some of them are energy, some of them are real estate. I made sure that I hit all of the different sectors. So all of these are just some very boring companies, essentially. And I just wanted to hit every sector and just make sure that I'm buying into these companies that over time, I know that they're going to still be around in the long term. So anyways, that is that. Move over into the crypto. I showed you guys this the other day. Coinbase, I got these $32 of crypto for free. This price moves a lot. So if you go in there, you use my referral link in the description below, and you answer a bunch of questions, you can get $31 for free, and then you can get $10 for the referral. So it's an easy $41. And the last thing is the PayPal crypto. Let's stay logged in here. I've got $980 in crypto. So let's check this out. Go to my crypto. And I've got mostly Bitcoin. Then I've got some Ethereum and some Litecoin. Just started buying into Litecoin, and it's going down. So anyways, let's check out the allocations, and then I will finish out this video. So I just wanted to show you guys, we got the net worth over here, 147, which is up 100,000 from the first video that I made. First video I made was 47,000, and that was actually back on July 1st. So I need to tell that story, but I'll probably tell the story of the year in review on July 1st. So anyways, we got 57% of it is allocated to 401k type retirement accounts, and only 15% right now is in individual accounts. So like I said, once I get that filled up with my Roth IRAs, I've got about $8,000 to put in there, then I'll start focusing on these TSP and 401k. Once that's filled up, I'll start focusing on individual stocks. So after that, I want to save up for a second property. So anyways, that is that. That's the portfolio. You guys saw it. You guys asked for it. You guys received. And this is the net worth. Anyways, yeah. If you guys like this video, make sure you give it a thumbs up, and I'll see you guys in the next video.